Hey, what's going on? It's Jason Lucchese here, and I wanted to create this video, as you can see in the title, how to perform due diligence purchasing turnkey rental properties and avoiding the problems that a lot of experts claim are gem properties. Now, I've been talking to a lot of folks here recently that have had some acquisition capital that they wanted to deploy so that they could have some income producing properties within their portfolio, and they wanted to have cash flow coming in on a monthly basis. That's great. You should be doing that. That's the long-term play. That's the longevity within any real estate investor. The problem is buying properties from folks that don't have good intentions. So I want to make sure that you understand from a standpoint what type of properties you should be looking for and looking at, because not every property is one and the same, because some people can tell you something's turnkey when it really isn't. To me, turnkey means that property management is in place and there's a renter that's already been established in that property. So you need to have that going from a turnkey standpoint. So property management in place, tenant in place. There's no rehab that's needed. None of that is needed. So when I hear that, when I hear from folks, hey, I bought this turnkey package from somebody and it didn't have it, it needed rehab, it needed a tenant, and it needed property management. To me, that is not a turnkey property. That is a rehab opportunity, and you should not purchase that property at what they're saying from a pro forma standpoint. Pro forma is just made up numbers that may be going off of what other properties are getting from a market standpoint. But I would never go off of pro forma, go after actual numbers. If you are not seeing actual numbers, then you should not be purchasing that property. A couple of key things that I would say: vet the property management company. You need to vet them hard. You need to talk to 3 to 5 referrals. And if everybody that you're talking to responds the same exact way, and for those individuals that are a little bit more advanced, they've been doing this for a while, you know what I'm talking about. For those that don't, here's the deal. Most people, if they talk to a property management company that really isn't doing this for the good intentions, like serving people, then every referral that you're going to talk to is going to say the same thing. Yeah, my checks come in on time every single month. We don't have any complaints. And if we do, it's just to, fix the light bulb here and there. Well, I will tell you this. If 3 to 5 people are telling you that, then that property manager is not legit. I'm just going to tell you that right off the bat, because not everybody's going to be on time. Not everybody's going to have, Section 8 filled tenants. And if they do, okay, then that's probably a response that you will hear. But not everybody's going to have Section 8 tenants in their properties. So expect that the property manager give you referrals to people that are going to be honest with you. Yeah, the property manager is great. They do their best with getting checks on time, but they do come in not on time every single month. Sometimes they come in on the 5th, sometimes they come in on the 10th, and that's great if they're upfront honest with you. The last thing I would want to hear is if somebody's lying to me about, hey, yeah, it comes in the first of the month, every single month, it's great. Because I'll tell you, that's more than likely if you hear that, that's a red flag. I'm not saying, hey, let's just leave this person and go off to somebody else. I'm just saying it's a red flag. The other thing too is I tell folks this, if they're getting involved with our training programs or training events, vet us out. Feel free, vet us out. Do your due diligence. You should do that with whomever you're wanting to get started with. If you are looking for a mentor, a coach, vet them out. I vet everybody out that I do business with, because I've gotten screwed over before. It's happened multiple times. And it's because I think I can trust somebody, and then they turn around, they screw you. So I've gotten much more proficient at the vetting process. So the one thing I would tell you to do is make sure that you're vetting out these properties as well. An inspection, huge must. Property inspection is huge. If they're saying, hey, if you can close with cash, no inspection, that's a red flag. Okay, that's something that you could do if you're buying through HUD, or if you're buying an REO, or if you're buying a short sale. That's fine. You still need to do your due diligence, but definitely get an inspection, especially if you're an out-of-state investor. Most of the time, a lot of the students that we have that have come, they've bought properties from some of these big guru companies out there that, say they have some great turnkey properties. They end up getting burned because they overinflate the numbers. Okay. They'll maybe, what they'll do is they'll pad the numbers, and, maybe you spent 25, 30 grand to get in their coaching program. But what they do is they pad those properties because of the money that you've already spent. So most of the time, those properties are vacant, from what I've been finding out. I'm not saying that's how everybody is, but it's pretty sad. It's pretty pathetic that people have to do that, especially in some of these states that are south of Indianapolis. I'm not going to name any companies. That's not the purpose of this video. Make sure you do your own due diligence, because it's a huge must. So CMA, a comparative market analysis, that's going to be key too. If you're not there yourself, a comparative market analysis will at least give you some numbers. You need those numbers from the actual multiple listing service, not Zillow, not Craigslist, not Realty Track. You need actual numbers. If you have somebody boots on the ground, or if you want to pay somebody to go and do a video, because I would not, the individual that's wanting to sell you this turnkey package, I would not take their word for it. You never know. So the one thing I would tell you to do is pay somebody to go and do a complete walkthrough of the property. Every square foot of the house. You should know exactly what it looks like so that there's no surprises. Because the last thing you'd want to do is buy a turnkey property that doesn't have a tenant in it. Okay. Even if the property is a tenant, has a tenant in it, at this point, you may not be able to walk through the property unless you have like a 24-hour notice that is given. If that's the case, if you could go through there, go look through it. Go look through the property, because it's a huge must, okay? Because you're not sure if that person's on a month to month. What if they trash the place and then they're out after that month? I see that happen quite a bit too. So go in there, look at the property, see if it needs rehab. If you can't do, because a lot of the times we have out-of-state investors that come and buy from us. We'll let them do their third-party walkthroughs. If they want to have an inspector go out there, if they want to have a real estate agent go out there, by all means, go ahead. We want you to feel confident and secure with your decision buying properties through us. Because the worst thing that you would want to do is make somebody really upset to where they don't want to buy more from you. Because I will tell you this business is worth so much more than a quick one-off of making 10 to 15 grand. The relationships over 10, 20, 30, 40 years are worth millions of dollars. Millions. Everybody on Facebook right now, they've got over a billion users. We all could be working in such a capacity to where we could all have a gigantic piece of the pie. But a lot of people get caught up in, hey, I need money now. I need money fast. So I'm going to do whatever I can to get this $10,000, $15,000. And next thing you know, they're screwing people over left and right. So don't make sure you're taking a look at the properties. I'm getting caught up in words here because I'm trying to get so much out here so quickly. But make sure, take a look at it. Do your property inspection. Do your due diligence. Take a look at the title. Make sure there's no outstanding liens. Most of the time, if these folks are doing something malicious, something could pop up last minute with some sort of a lien popping up. Okay. Make sure. Here's the thing that I really love too. If I'm purchasing properties, I'm not going to use some special little purchase and sales agreement. I'm just going to use our own state-approved purchase and sales agreements. That way, if you need to have an attorney review your documents before you buy, they already know about the state-approved purchase and sales agreements, and they already know what language to look out for. Because if somebody's going to try and add in some special language that you don't know what to look out for in some line section, some subsection of a purchase and sales agreement, they're going to get it past you. But if you're using a purchase and sales agreement, an attorney's going to know exactly what information to look out for, because at that point, they have to add any special language to the addendum section. So it's going to be fully and completely exposed at that point. So looking at it from, again, you want a turnkey property. A lot of investors want to buy turnkey right now. There's a lot of capital available for folks that are really wanting to do this. And the best thing to do is go off of actual numbers. And in order for you to get that, I need to look at current lease agreements on properties. Look at the current lease agreements on the properties, along with what the property manager is asking for. How much is the property manager actually wanting? How much are they wanting per month? Normally, it's going to be about 8-10% of what rent is. I would want to take a look at, from a standpoint like the neighborhood perspective, what are going to be my expenses? If there is a vacancy, how long is my vacancy loss going to be possibly there for? Like, how quickly can I get a tenant in the property? Like, how quickly can I do that? So if somebody's in a property for 4 months and they're on a 12-month contract, then I want to see the last 4 payments that they've made. I want to see that they also put the deposit down that's part of their lease agreement. So those are things that I'm going to want to see. I want to see those things. And if somebody can't give me that information, then something's wrong there. And if you're buying a package, if you're buying like a 10, 20, 30 property package, then you should be able to get bank statements. You should be able to get financial statements. You should have everything completely broken down for you on what you're purchasing. Because, when we all do this, like when we go buy a car, right? We want to look at Carfax, not because Carfax is new. We want to look at the Carfax. We want to look at this, that. But we don't take time to look at, the properties that we're buying. Yes, sometimes you need to move fast. You need to move quickly on a property, but you don't want to move too quick, because, if you waste 30, 40, 50,000 bucks on a property that you were told is worth about $120,000, and it's only really maybe worth like 30 or 40, you're way upside down now. You're in a really bad spot financially. So that's the last thing that you would want to do. The other thing is putting yourself in a position to where you're letting somebody take advantage of you. And trust me, I've been in this spot before where, I've had friends that I thought I could trust and gave them tons of cash, and they end up turning out to be dirtbags. It's just the nature of the beast. People are out there that are like that. But I always encourage folks, do your due diligence. If you're purchasing a property from us, if you don't ask questions, I'm going to make sure that you do, because I want to make sure that, first of all, we establish a solid foundation right off the bat. I don't want us to establish a foundation to where it's got cracks in it and we're unable to build on it, because once that happens, the relationship's fizzled, and that's my fault. So I want to make sure folks that are 100% confident, comfortable in moving forward, because that is key. If you can't have a good relationship that moves forward right from the get-go, you're not going to have repeat buyers buying from you, which is really, really sad. You want to have people that are constantly coming back because you did a phenomenal job. If you don't do that, that's your fault. And have an attorney review everything. For goodness sakes, it's worth the investment. If they spend an hour or two, fine, pay the $500,000, have your information reviewed, especially from a legality standpoint. You should be able to look at the numbers. If you don't know what to look at from the numbers standpoint, then hit up either myself or somebody else that you feel that could help you out from a mentor or coaching standpoint. There are folks out there that do look out for folks still, and we want to work synergistically together with you. So it's truly, truly up to you from that standpoint. It's just unfortunate that there's folks out there that, claim they've got these gem properties, and next thing you know, A, there's no tenant, B, there's rehab that's needed, the value of the property was overinflated by quite a bit, and the property management companies just flat out sucks. So you've got 4 things that you really need to look out for, and trust me, there's more, but those are the main 4. And I would say the 5th one is definitely title. So 5 things that you need to look out for when purchasing properties, because you never know. You purchase a property, it's got a federal tax lien, or it's got some sort of a municipality lien on it. You're not going to get those suckers off, and they're going to be extremely tough to negotiate off. They're extremely tough. They more than likely won't settle for less than what's owed, especially from the federal level. If you've got a federal tax lien on there, it's going to be really hard to negotiate those much. If it's 40 grand, you're more than likely going to pay anywhere between 38 to 40,000. If you got a municipality lien on there, and it's like 10 grand, you're more than likely going to pay $900 to $9,500, if not all of it. So you just have to make sure that you're looking at title, doing your due diligence, checking lease agreements, making sure that a turnkey property is really turnkey. There are some really, really great companies out there that do what they say they're going to do, but make sure you're always asking for referrals. It is the biggest key that I can tell you right now. If you can look for the individuals that have the right types of people, that would be absolutely great, because those are the folks that you really, really need to have on your side. So make sure you look for the right individuals to do this. If you need help from us, we'll be more than happy to do that. I've got to head out here in just a second to coach some 4th grade basketball. But if you have any questions real quick, I'll be more than happy to answer any questions that you have, and we'll go from there. So let's see if anything comes in. I know I got some people on here watching, but it really bothers me that people don't do what they say they're going to do with selling people. If people are spending, their retirement savings on turnkey properties, which, don't get me wrong, it's a real estate. I love real estate. It's a great investment, but you have to know what you're doing. You can't have somebody, try and dictate how you're going to spend the money. You have to be able to step up and have people, show you exactly what you're looking for. Like here in the Midwest, you got to look for properties anywhere between 12 and 15% cap rate. It just depends on what class you're going to be buying in. B class is obviously going to be higher. A class is going to be higher. You want to purchase, if 12 to 15 cap is going to be in that C to D class range. And I'm going to stay more in the higher D class and C class all day long. Those are the types of areas that, we're typically buying in here in the Midwest. It does vary from state to state. Obviously, you can buy, 10 houses for what it would cost on one of our 40,000 properties. So you could, if you're buying a $400,000 house out in California, which is kind of like a shoebox, depending on where you are, you can buy 10 of those here, and they're cash flowing extremely well. But if you have any other questions, feel free to reach out to us. Our number is 317-900-1307. And just feel free to reach out. We're here for you 100%. But other than that, I don't see any questions coming in. So thanks for joining me on this live video. And I will talk to you soon. Take care. Bye now.